Super investors are investors with more than $100 million in assets, and that's why looking at the changes in their portfolios is a great indicator of a company's growth potential. Microsoft is a company whose product you probably use every single day, and that product is Windows. As we can see, Microsoft has been bought a lot in the third quarter of 2024, as well as the second quarter and the first quarter. Now jumping to our stock valuation spreadsheets, we can see that Microsoft has a low starting dividend yield of only 0.79% and a dividend payout of $3.32. Now something I love about the company is their low trailing free cash flow payout ratio of only 30%, which tells me that the company still has a lot of free cash flow left over after paying out their dividends to buy back shares, pay down debt, and raise their dividend into the future. Now let's jump straight to the 9-pillar analysis, where we can see that Microsoft gets a rating of 7 out of 9 with only 2 pillars in the red. Now something I really love about Microsoft is their high growth in revenue, high growth in free cash flow, and high growth in net income. If we have a closer look, we can see that indeed the revenue has been growing very well over the past 5 years, and that is the same case with the net income, and the same case with the free cash flow. And as we like to say on this channel, the growth of a company is the most important thing, as that is the one thing that the intrinsic value of the company is reflected of. Now we can also see that Microsoft's 5-year profit margin is sitting at 68.77%, and that they have decreasing shares outstanding at a rate of 0.56%, which is always great, as it means that you as an investor will own a larger percentage of that company with years to come. Something I also love about Microsoft is their consecutive dividend growth, sitting at 8.63% yearly over the past 5 years. Now if we zoom into pillar 8, we can see that their dividend growth is actually much higher than the average company dividend growth, sitting at only 4.13%. So this makes up for their low dividend yield of 0.79, which is actually lower than the average stock dividend yield. So overall, I really like Microsoft as a dividend company. But now let's have a look at their 5-year P/E ratio, which is sitting at 25.11, which means that investors are overpaying for the company's earnings. Now with Microsoft, this is quite expected, as they are a one-of-their-kind company, and therefore they should be trading at a premium, which they are, as we can see. And this is the same case with the price to free cash flow, so I don't really mind these 2 pillars being in the red. And finally, looking at the long-term liabilities over the 5-year free cash flow negative dividends, which is sitting at only 0.63, and means that Microsoft does generate enough free cash flow to cover all their long-term debt while paying out their dividends. So overall, Microsoft is looking very well compared to the 9-pillar analysis. And so now let's calculate its intrinsic value, first using the Graham's formula revised. And here we plug in the 5-year earnings growth estimate at 13.52 and get an intrinsic value of $359.81. For the second valuation model, we take the free cash flow of the company, calculate the future growth rate of 15%, and get an intrinsic value of $501.83 after we plug in a discount rate at 7.6%. Now we will skip the third valuation model, as there isn't a single company on the market that I'm comfortable comparing Microsoft to, and we will arrive straight to the dividend discount model, where we will project the growth rate of 10.67% into the future, and using our alternative model, we will arrive to an intrinsic value of $476.32. Now finally, arriving to our ultimate valuation, we will average out the 3 valuation models and get an intrinsic value of $445.98, which is about 6% higher than the current trading price, and with a margin of safety of 10%, we get an acceptable buy price at about $400, which would mean that Microsoft is currently rated a hold. And with that, if you enjoyed the video, consider leaving a like and subscribing, as it really helps me out.